Hello, fellow traders. 'Tis I, the Rumpled One. It's January the 12th, 2017. Let's talk trading. I've been talking to, I don't know, 4 or 5 different traders on the phone or via, some chat on the internet. So I decided maybe I should start some Let's Talk Trading videos. And today's topic is going to be how to drive yourself nuts. When you're trading, I was mentioning to a couple traders that when you enter a trade, you have one mindset. If you're thinking the trade's going to go up, you buy, and if you think the pair is going to go down, you sell it. But then, if the trade goes against you, your mindset starts to shift, from positive. Now all you're thinking about is kind of escaping. And then what happens is price gets just close to your level. Like if you're long, the ask is at your level, but the bid's just a couple of pips below, and it's just like, come on, get up there. And you start cussing at the screen. And you've got a totally different mindset than when you entered the trade. And then what'll happen is, and this is where it gets good, price will go up and you'll be at, flat, zero. And then you might be up, 0.2 pips, 0.4 pips. And maybe then you're up a pip and it's just sitting there and it's stalling. And you're thinking, no, you want one more pip. And then it drops on you. And then you're, back to cussing again. Or, you're up and you're up a pip. You're thankful because you maybe been down 10, 20 or more pips. And you're just, you're just right above break even. So, you can't wait to click and just get out of that trade. Just be done with it. And you made a pip profit. At least you didn't lose. And then you look at the screen and the sucker runs about 40 pips. And now you are just fuming. You're really screaming at the screen. So, do you see all the different levels you went through? Basically emotional levels. I mean, you got to get hold of those emotions. You got to get your psychology. You've got to get that under control. Because what you'll do is, no matter how the trade turns out, if you get angry, if you get upset, then, what's going to happen in the next trade? You're just going to keep repeating the same process over and over and over again. And it's just going to drive yourself nuts. So what do? And yesterday, if you were trading any of these pairs, let's put it on an H1 time frame. It was just really easy to drive yourself nuts. Let's just say you went long here and then all of a sudden it tanked and then it came back and it came right to this point. Maybe you were hoping it would do this, but oh no, it did this. Now you're really upset. Let's see, that's a H1 time frame. Let me do it on a 15-minute. We might get to see more of the crazy action. Because it was wild. So, yeah, right here. And then right there. What if you went long here and it went up, but you wanted more and then it did this? Oh, or let's say possibly, you went short right there and then it did that. And then you bailed and then you saw that. You're just going to be using every, 4-letter word, 7-letter word, 6-letter word, anything, right? So what do? How do you avoid that? Well, you just decide that, this is what I'm going to do. And if you've watched my trading videos, geez, over a year ago, I think, maybe two, maybe even more. I wrote that exit playbook. And the only time you really need to be upset is when you don't follow your rules. Now, some of us have a problem following the rules. We want to bend them, we want to break them. I mean, I know I have a hard time sometimes waiting for a candle to close like I should, and then I wind up down a couple of pips that I didn't need to be. And what that does is it'll take me out of my game. Because had I got in and price gone my way, I might be more inclined to let it ride. But when you're fighting back from a loss, you just want to get even, or maybe just get one or two and be happy. But, you know, one of the things you just have to remember is the market's going to be there tomorrow, the next day, and probably the day after that, you know, or the next hour. I mean, you don't have to be in every trade. And if one doesn't work out, that's okay. Maybe the next one will. And you can't be wrong all the time, can you? So you just really have to monitor and be aware of the self-talk, because you'll just drive yourself crazy. I mean, it's just so simple to do that. Drive yourself crazy. I mean, you can be in a trade and maybe it goes your way for a couple of pips, but you want more, and then, you know, it tanks and goes against you, never to come back to that level for, you know, until it sees 100 pip drawdown. So you just have to, you know, work on your exit playbook and follow it. I mean, don't expect every trade to work out. You just say, you know, every now and then you're probably going to have one that doesn't work out. But you just have to be patient. I mean, like with the 3LZZ, you know, if you see a ball, well, let's see, like right here, we've got, let's see, let's look at the Euro New Zealand dollar. Okay, now this is saying we've got a 1 because this is synthetic, but you see right here you don't have a 1. This is telling you there was a 1 here and a 1 here. But remember what this one's saying, the synthetic one says, if this is the lowest low out of the last 5, 1, 2, 3, 4, 5, then call that a 1. And most of the time it lines up, but sometimes it doesn't. But it's close enough, because if I were to put the ZZ, all the code, the ZZ indicator into the dashboard and try to run 4 times, I think I got 21 pairs here, this computer would just come to a crawl. But this is a good enough approximation. So basically what this says is you don't get to trade this bar, not on the M15. You need to move up a time frame. Okay, so if you move up a time frame, you can see here there's really not a ball, and it's also saying there's not one here. So we can drop back down a time frame, and we just wait for this bar to close. And then if conditions look right, we enter the trade. But to jump in now, you're just asking for it, because then you're going to start that pattern of entering the trade, you know, believing that that trade could be a winner, and then all of a sudden it starts to go against you and you get emotional. And then when it comes back, instead of riding it out, letting it go towards your take profit level, you exit early, only to then get mad at the market again. So it's just like you get mad at the entry, you get mad at the exit, you're mad in between, you drive yourself crazy. I know some of you guys are laughing because some of you probably remember our conversations. But that's really what happens. So you just have to sit here and wait because, it takes what, a second to click the mouse to get in the trade and a second to click the mouse to get out. So you might as well wait. You're going to be waiting anyway, so you might as well wait for the signal. Otherwise, you're going to drive yourself crazy. Oh, here's a good one. Let's see, we've got some movement here. Let's take a look. Oh, there's a big 3. So see here, you might be tempted to jump in, but if we look here at the 3LZZ multimeter, you got 3s across the board. Then you've got a 1 on the weekly. So it's almost like, wow, you got to wait for a lot of stuff to close here. Let's see what the daily looks like. Look at that. You might just want to say, you know what? Perhaps I'll just wait for the end of the day. I mean, that's only about 4 hours and 10 minutes my time. Why enter a trade when I can wait? Because see here, if you look at it, you see, you had that ball. Now, you could have done a top scrape and gone short, take your chances there, or you could wait. And then see right here, it comes up into the wick zone and then falls right through. That's a daily candle. Okay, we've got a high 70.66, a low 68.32 in my head. What's that look like? 234 pips. Wouldn't you like to wait on that? I mean, okay, maybe you don't get all of it, but you could sure taken a big bite out of it. But you just have to wait. I mean, you see the 3, the candle closes, you see it enter the wick zone, you know it's going to leave the wick zone either that way or that way, so right there, there's your trigger line, right there, and then, down she goes. And then here's another one. You see the 1. This is on the daily, so you let it close. Once again, you see there's your trigger line. It got here, got into that wick zone. Didn't go this way. It's going to come out. It comes out this way, and there's a possibility. Now, since this is a red candle, it probably came down. So you probably got in the wick zone about here, which is 68.57. Okay, and then maybe you took it to the close. $68.70. So you can see there was money to be made. Or if price went the other way, if it went up and then came down to the wick zone, you make money that way. Point is you have to wait. And you have to talk to yourself in a way that doesn't drive yourself crazy. So, if I bag 5 pips, I bagged 5 pips. And I shouldn't focus on the 20 pips I could have had. Because if I do that, then the next time, instead of bagging 5 pips, I'm going to try for more. And I'm going to wind up with maybe 1 pip, or no pips, or minus pips. So, you see, that's what it all boils down to. You just, if your plan is to grab 5, just keep grabbing 5. Do that 20 times a day, you got 100 pips. So, as always, as I've shown you right here, fellow traders, it's not what you trade, it's how you trade it. TheRumpledOne signing off, draining the banks.